Hello, everyone, and welcome to the Hub Live Q&A on Friday, the 21st of July. It's a fantastic day because we've got Rob Roy here to answer all of your questions. How are you, Rob?
Good, Dux. How are you?
Yeah, not too bad. Whereabouts are you in the world today?
I'm actually in Orlando. You can tell the hotel look in the background. I'm playing in a FSGA, Florida State Golf Association amateur tournament over the weekend. So once the market closes, I'll change the hat and head out, do a little practicing, and get ready to play over the weekend. So looking forward to it.
Well, I'm very, very jealous of that. But we're not here to talk about golf. We're here to talk about the markets this week. And it's been an interesting market. Lots of earnings out this week. I think it's option expiry today. And also a few different things changing in the NASDAQ for us. Why don't you get the viewers up to speed on that?
Yeah, you're right. Getting into earnings week, and then next week really going to be a big deal on earnings. So we might have a lot to talk about with the Q&A next week for sure. But yeah, there's a big rebalancing going on with the Nasdaq. I think everybody's familiar with the Super Seven, heard it called Magnificent Seven by some of our subscribers last night. Yeah, so they're going to rebalance so that these seven stocks aren't controlling the major part of the Qs in the Nasdaq anymore. So who knows what's going to happen? The last 2 weeks when we were been doing these, the market's been up, and then right after we finished the live Q&A, then the market has tanked into the close. So let's see if that handles or works the same way. And I think there could be some fireworks going into the close with that rebalancing that's going on. Some stocks being sold off, some having to be acquired, etc. I think the main thing I wanted to show is that if we look at this zigzag pattern that's here on the Qs, not only are we going through this rebalancing, you can see that with this pattern, we had call it a 38.2% B wave correction. We're supposed to go to 61.8. That's where we hit, and now we're back down. And then yesterday's close revisited the previous fib level, which is 38.2, and we're just kind of treading water a bit on the Qs today. Well, like I said, I think that may very well change into the close. So the interesting thing about this is when you hit a fib target, the possibility is that you go to an extended target. And normally what happens is if you are going to extend, which means we'd move past 61.8 up to 100, you revisit the previous fib level, test that, and then you're clear to move to the next level. So it's possible that, whatever the motive is, whether it's this rebalancing or whatever, that we are going through this testing process, and it does leave room for the market to go to that extended level next week. Now, the other side of the coin is that this zigzag has done what it's supposed to do, and we could rest here and perhaps even start the wave 4. So it's a little tricky right now, Dux, to see what happens into the close today and at the open, because the rebalancing actually goes into effect on Monday. So.
All right. Well, look, we've got lots of questions coming in, so keep sending them all in. We're going to get to as many of them as we can today. The first one we had was that came in even before we went live, and you're welcome to do that every single week too, people. The first one we want to look at, is Airbnb, ABNB.
The whole real estate thing is just pretty wild right now with the lack of availability. And you talk about the builders. Rates are going up, so nobody with a 3% mortgage wants to move to a 7% mortgage, so they're not selling, and there's just not a lot of capacity. People still, wanting to own homes. There's supply demand, right? That's what the markets are, Doug. So you have that kind of an effect going on in the real estate market in general, which I think has put a bid under stocks like Airbnb. But then on top of that, it seems, I believe we talked about this a few weeks ago with the whole consumer confidence survey, where they're saying that people were going to be staying home, staycations, and they weren't going to be traveling. Well, that doesn't seem to be playing out, at least not my experience. I've done a little bit of travel here over the last couple of weeks, and the airports are full, but everything's full. So it looks like people are on the move this summer, and that clearly is positive for Airbnb, and right now it's making a big move to the upside. At this point in time, it's a little bit vertical, but not really extreme. So could it continue higher? I think it probably could. If we take a look at the DMI. The only concern here would be the ADX is now at 40. That means the strongest part of the move is over. And as we've talked about so often here, Dux, it doesn't mean the entire move is over, but what it's saying is that part of the move was strong. And if we do continue higher, it'll be on less strength. And that means, be a little more careful on your stops and be quicker to take profits. If you get some sort of a big move, maybe you might want to look at taking some gains. Now, if the ADX does roll over and break back down below 40, that's the point in time where you'd say, okay, it's time to get out. So it just keep an eye on it, but still looks pretty good right now.
Yeah, listen, I'll be using an Airbnb in a couple of weeks as well with the family.
There you go.
That's a question for you, Will. But the Catalina's come in with a few stocks I want to look at. The first one to look at is Adobe, ADBE.
Yeah, we hadn't looked at that one in the last week or two, haven't we? I mean, that was certainly got caught into the whole AI mix. And so here's kind of what we're talking about. It had a big run, it consolidated, and then it took off again, and then the ADX moved higher. And so this moved to the upside here, this last part of the move. Let's see if I can get today's quote in there. The last part of the move was clearly not as strong as the previous part. And so with that in mind, keep an eye on this ADX, and it was flattening out again. Seems to me that it might be a good time to go ahead and take some gains there. Little bit of a sideways day there. There's today's quote. And if the ADX breaks down below 40, it's a sign to get out. But it's not the best signal when the ADX is above the positive directional indicator. It's going down. It seems like maybe Adobe wants to take a pause here for a bit. So better part of the run, I think, is probably in place here.
I was hoping this one would come up because I didn't think the numbers were that bad, but let's have a look at Netflix.
Yeah, they weren't. You wonder what the expectations were. I agree with you. I didn't think the earnings were that bad either. But apparently there was, remember they used to call the old whisper number? We used to have that with earnings. And I think perhaps the expectation was because I think most people have seen it. So many people doing login sharing, and they now have a message that comes up, is this your primary residence? And then they're offering a discount to anyone that might be sharing your login information. I think we've all done that with family and friends, etc. And I don't know, the only thing I can think of is the expectation was for that to have been greater, maybe more aggressiveness after that, because there was an uptick, but maybe not what people were expecting. And then the other thing, Doug, perhaps the strike in Hollywood is playing in. Is there going to be new content moving forward? I know Disney's concerned about that, so maybe that played into it a little bit as well, or just some good old-fashioned profit taking. But it is following through lower again today, so that's concern. Sometimes you just get profit taking on an earnings report and then that's it. But the follow through to the downside today, I think we're probably headed to the 50-day moving average here. A little bit of support all the way down there at 400, which happens to coincide exactly with where that wave 4 corrective level is targeted. So it seems like Netflix wants to come down and test 400 now. And if you don't have the stomach for that, perhaps you go ahead and get out. The good news is that gap is up there, but it could be a while before that gap gets filled after that recent run.
Okay, and the last one that the Catalina wants to look at is Qualcomm, which is actually having a pretty good day. It's up 4% so far today.
And there's a number of those stocks like Texas Instruments, a few other ones are getting big bids today, and that's because to balance out. We talk about market weighting versus equal weighting indexes, and that kind of stuff is occurring. And so this is the exact same scenario that played out with Texas Instruments yesterday. Yesterday, big down day, and then turn around and recovering right back to the upside today. And so there's the bounce right back. And so both of those doing the exact same thing today. And that's the effects. In the end, it doesn't look like there's, almost looks like a net zero, down yesterday, back up today. So they're getting caught up in that. Now, the key with Qualcomm is we are trying to break above this resistance area here at 125. I don't think today matters. I think we have to wait and see what happens on Monday, because the other side of the coin here is that we had this wave 5 in. We're supposed to go back to the previous 4. That's where we are. You can see that got turned back in June. We're trying it again. So a little bit of caution here, but if we can get some follow through above that 125 level, I think we're pretty clear to go up to 140. But let's see what happens on Monday first, if there's some follow through, especially with all the odd things that are going on these past couple of days with the whole rebalancing stuff.
Yeah, and Catalina rightly points out the Texas Instruments reports next week. They should report on Tuesday.
Yep,
So we'll see a
correct.
good read through to that as well.
Yep.
Catalina also added on, can you briefly elaborate again on how you interpret the ADX?
Okay, the ADX is part of a large indicator, the DMI, which stands for Directional Movement Index. It was created by Wells Wilder, who also created a couple other indicators, RSI, that most people are aware of, relative strength. Interesting thing about Wells Wilder is he was not a trader. He was a pure mathematician, but he created indicators that are widely used. RSI is looked at a whole lot more than the DMI. I just prefer the DMI. Now, the way this works is the ADX is the black line here. That's a measurement of strength. So it's measuring the strength of a move. Now, it has nothing to do with the direction. So in other words, if the ADX is moving down, that doesn't mean that the expectation is the stock's moving down. It's telling you that whatever the trending move is getting weaker. And if the ADX is moving up, whatever the trending move is getting stronger. So in other words, you could have the ADX moving up on a downtrend or an uptrend. So it's telling you the strength of the current directional move. And then the two indicators here are the green line there is positive directional indicator that measures buying pressure. So that's the strength of the buyers. And then the red line is a negative directional indicator measuring the strength of the sellers. That's in general terms is what it is. And we have a whole hour session in the education area on our indicators at ewotrader.com. But in general terms, that's how it works without spending the whole entire time going through it. But that's an overview.
Thanks for that. I appreciate that a lot. Lots of great questions coming in. Keep them coming, people. One here, I don't really know how we can look at this as far as stock wise. There's many different stocks you can look at it, but Proud Immigrant would like to know any way you could give comments about the real estate market, the USA, Canada, Australia, and so on.
Well, the real estate market in general in the U.S., as I mentioned before, was it XRT? Is that the retail ETF? So
it's retail, yeah.
There you can see that it's still trying to move up. I really kind of thought that this leveling off. I was a bit surprised on this last little tick higher on the move. So we had a little bit of a move down as rates started up, and the expectation, and I had the same expectation, was that this was going to adversely affect the real estate market. But then in listening to the CEOs, that's where the quandary has come in. And it makes sense, right? Who wants to give up a 3% mortgage, even if you're looking to upsize your home or downsize your home? Do you want to really double your mortgage payment by giving up your 3% mortgage to go get a new 7%? So nobody is, or very, people, when they say nobody, they're like, well, there's X number of houses. I've had people say that for sale in my area, but the people selling their homes is way down. But there's still people like where we live in Florida wanting to move here, and there's just no inventory. And so builders, even with higher prices, we went through the higher wood prices in the past, even with the inflationary pressures, home prices, people are still paying over ask price. You're getting into the bidding wars. All that is still going on because there's simply not enough supply. There's more demand than supply. At some point, this will balance out. And I do think this is a bit of a global phenomenon right now as well. The only one lagging is China. China is actually in a little bit of a depressed market now from a real estate standpoint. So I think when we start to finally come back to earth here a little bit in the real estate market, if you are someone that focuses on real estate trading, you may look to China because they may be getting ready to come out of their doldrums, in the opposite scenario of where we are right now. But that's the general state of real estate right now. At some point, the higher rates are going to take control, but it won't be until supply is able to balance out with demand. Once that happens, you'll start to see prices compress.
Thank you for that. Now, another one we're looking at, I haven't looked at this stock before, Riot, RIOT. And looking at the chart, very, very interesting chart.
Yeah, this was a big favorite back in the meme days. People looked at this one a lot, and pretty vertical move here, a la Coinbase, similar there. So blockchain is where we are. So this movement to the upside here coincides with coins breakout and a little consolidation here. And this is the ideal scenario. It got overbought. You know how many times we talk about that, Doug? So I don't like it when stocks go vertical and then get away from the 10-day moving average. So consolidating here around the 10-day moving average is ideal. And if we can hold here and not give back, then perhaps we can take another run, especially if the cryptos are going to run. I don't go through that again because we've detailed that so many times. But this could be a space. If the rest of the market wants to take a break here, we could see a bid move into the cryptos. It's going to be really interesting from the whole risk on, risk off scenario, because it's viewed that the whole everything involved in the crypto world, you know, is viewed as a little bit higher amount of risk. So if the market corrects in general, is that going to pull all these down, or is that going to be a place where people go and put money? And I think that's going to be an interesting scenario to play out. But a little more consolidation here, and then perhaps it could take off on another run, putting our DMI back on. We do see that that move to the upside was strong, but here we are again above that 40 level, and we have to keep an eye. If it does curl back down below 40, then I think that scenario of bouncing here and continuing higher is off. But for now, it's still a possibility. So keep a close eye on that 18 level.
Okay. Another one to look at, and I actually did a video with someone earlier this week. It's a very interesting chart. It's Rivian, which had a phenomenal year.
Yeah, I feel like we were the catalyst there. Dux, when I made the comment that I like the car better than the stock chart. Remember that conversation?
I do remember that conversation.
Ever since then, it's taken off. It's rushed to the upside. So I feel like we kind of had a handle on this. But it's interesting. On the drive over here, I passed one, and it's an interesting looking car. It really is. But notice I said I passed it. But anyway, I'm still the old school American muscle rumble V8 stuff. But anyway, the chart here on Rivian has been pretty strong. I have to wonder with where we've been if perhaps this move is about it for a while. Even though we are consolidating, see how that ADX is starting to roll back down. Again, remembering that this is an indicator of strength. And so when it rolls back down, strength is weakening. And the key level here, based on how the indicator was set up, as a break below 40 tells you that that part of the trending move is over. And it looks like it's trying to do that. So, yeah, I just would be, let's see if we can get today's quote, a little bit concerned here. There we are. It's had a volatile day, but basically gone nowhere.
Yeah.
So we'll see if it can bounce from 24 here and get to 28. Maybe there's a bigger run. It's still in a qualified 5-wave pattern, and it's also at some significant fib resistance here at 61.8. So you've got a lot of things talking about, perhaps this one consolidates with a little bit of give back over the next couple of weeks. I think it's hard to see a big catalyst for this stock to move forward. I don't know what that might be. So
yeah, another interesting one to look at, and there's some volatility this year on this one. Palantir, PLTR.
Yeah, that was a big one. PLTR. I was looking at Plantronics. So Palantir has been it was a darling for a while.
And then it came crashing back to earth.
And then see, this is where we were, and then all the way back down to below 10 when it get down to almost 5, and then it's also had a pretty good run. And it is also the other thing that makes you wonder about whether or not this rally is long in the tooth. What the Dow is now 10 or 11 days in a row to the upside, and that could be a little bit of money moving out of higher beta things into the big companies, to weather a recession, park your money in the biggest companies. But yeah, this stock just is all over the place, and it's testing 16 now. We did hit that wave 5 tap box, the ADX coming down. It looks like this run's tired as well. So we're seeing a lot of that, aren't we, in the stocks that we're looking at today? A lot of these charts have had great runs, but it looks like they're tired and need a rest. Now, the key level to watch here, if you're long, you're right where you need it to hold 16. Now, it's held it on the low today, but it needs to hold this 16 level. If it can hold it, perhaps it can try to gather some strength to go back. The DMI is not suggestive of that. But if it breaks 16, then you're probably at 14, and holy cow, if it doesn't hold 14, we could be resetting all the way back down to 10. So this is your level if you're long. I think your stop needs to be at 16. If it breaks that, I think it's time to go.
Just a reminder, like for next week, we've also got the Fed decision on the 26th. They've got a meeting on the 26th and 27th. And
good point.
Yeah, and there's a question in here from Noah saying, what will Fed do to TNX next week?
Oh, man,
they're testing out today, Rob.
What's that?
Everyone's testing out today.
Yeah, no, great. I love it. This is, to me, is a really important thing to be looking at. So I'm happy that they're watching this, because we broke above 40, which is that range that I was talking about for so long. The sweet spot between 34 and 40 was key, and we broke above 40, but it didn't hold, right? So we came right back down. So we're back in the range, but now it's trying to move back up again. And the market looks ahead. So some of this bouncing back on rates, I think, is looking ahead. The Fed has been, I think, a little bit more hawkish than people thought. Could that push the 10-year higher again? Absolutely. Depending on what they say, they've told us 2 more rate hikes for sure. And we got to see some more of the inflationary data. Listen to what Powell says after that meeting. If he talks about raising the potential for a third one, if we break back above that 4% level there, then which is 40 there on the TNX chart, I think that's going to be a real challenge for the Qs and tech stocks, and maybe that's what some of the rotation is that we're seeing already into the Dow.
Okay. Another question come through another way here is on Disney. Now, I'm not sure if everyone knows this yet, but there's just before we came on air, there was a headline coming through of speculation, or even words, that ESPN has been in talks with the NBA and the NFL about investing into ESPN, which is actually, I saw Disney move a lot higher on the back of it. Obviously, I think we talked about Disney last week, right, Rob?
Yeah, and I think the breakdown that we were afraid might happen last week did occur right afterwards. So I think we were kind of spot on that. And I'm in Orlando now, and living here in the Central Florida area, obviously Disney has been a stalwart here for quite some time, but they're just in a world of hurt right now. They've got all the political stuff going on with the governor of Florida. That's a side thing on the fact that it is hurting, from what we hear, attendance. Like, usually when you go to Disney, if you don't buy one of those express passes, you're going to get in 2 or 3 rides in a day, and that's it, because the lines are so long. But what we're hearing is that all the rides at 15-20-minute waits, that's it. That's almost unheard of. So all that political stuff appears to be hurting them. Then they got the content issues, and then I was reading Bob Iger was saying that they're going to significantly slash their budgeting on creating new content with Marvel and those kind of movies. They're expensive to make, but they've also been cash cows for them. Far be it from me to criticize someone that's been as successful as Bob Iger has, but that doesn't make sense to me, that you slash the budget of the films that have been your cash cows. I don't get that. I'm sure he's got his reasons, etc. It just seems like Disney has some problems. Now, the one thing, which is my long-winded point to what you raised, and the question was, he said that the one area that they are going to continue to spend, they're not going to slash the budget, is on sports. And so that's kind of what you're seeing today. Is that one piece, ESPN, is that going to be enough to keep Disney's chart from falling more? I don't know, Dux. The bid today is nice, but it's got to get back above 90, I think, before we could even consider looking long at Disney again, with all the things that I've gone through, all the issues that they have. So I think it's got a ways to go. I'm more concerned with how far down can this wave 5 go. I think we could be looking, 85 is where it has to hold, right? So it's tested that after we talked last week. It did, not that we caused it to happen, but it just, that's where it went, and it's got to hold 85. Other than that, it's it's the whole Katie bar the door scenario, your favorite expression, Doug. So that would be rough. So it's got to hold 85 on the low. Couldn't look long till it gets back above 90. Is this, is just the ESPN piece going to be enough? Bob Iger's got his work cut out for him now, that's for sure.
Yeah. All right. So we're coming up to the last couple of minutes here in the show. We're going to look one last one. I know there's a lot of other stocks that people got questions in there for. Don't forget, you can join on Tuesday with Rob at 9 o'clock, right? Now, what's that show called again, Rob?
TradeFinder. Yeah, every Tuesday night at 9 o'clock, we talk to markets, and we have to do a little bit more Q&A at the end there. So yeah, please, if you haven't registered, please do so. You can go to our website, evotrader.com, and register there. It's free. And a lot of fun. So yeah, another opportunity to ask questions there during TradeFinder.
And then we had one last stock we're going to look at, and it's actually a good tie-in for what we're just talking about with Disney in their controversy route. Is Budweiser recovering, or Anheuser-Busch, I should say?
Yeah. Well, it seems like at some point in time that whole thing was going to play out. And, it's the company has a whole lot more than just Bud Light, right? So it's only one aspect. It was the #1 selling beer in the country, but it seems to have it's had at least a relief bounce here, right? And I feel like, the next quarterly earnings, when is that? It's going to be a challenge with the fact that they had to give a lot of it away. So it does make you wonder, what that play out's going to be. I can't see on the chart there when the next earnings report is, but I feel like that could be a bullet to dodge. That's a rough pun when talking about Bud Light, isn't it? But you wonder how it's going to affect the earnings with what they had to do to give away the beer that was aging on the shelves. But from a stock chart, it's rebounded to test an important level here. And if we can get back above this 49 level, now the interesting thing is this is an area, and I think this is where some of the buying has come in. If we are going to go into recession, alcohol, tobacco, gambling have always been areas of defense. Thus, more money's moved in, and the viewpoint is those are our vices. No matter what's going on in the economy, we'll find a way to, drink, smoke, and gamble. Getting an opportunity to buy this stock at such a deep discount here with the big move to the downside appears to have been attractive to some people, and probably a very smart move to hide and going into potentially a recession into this year, early next year, what people are talking about. So now the rubber hits the road, though, right? So we've had the oversold rebound, and we're right here around this 59 level. It isn't a qualified 5-wave pattern to the downside, so it's got to go a little bit higher here to disqualify that. So this is going to be the key. Can we stay here? Can we get above the 60 level and do that with a little bit of follow through? And then it could be no harm, no foul. We could be all the way back up in this 66 area, and again, with money potentially moving into that area from potential recessionary fears, that could be a saving grace for them with what was pretty ugly for a while. A good conversation to finish on, Dux.
Yeah, they report on the 3rd of August, so it's a week and a half away.
Yeah, thank you for looking that up for me here.
Yeah, no problem. A few people asking about Tesla and so forth, that we didn't bring it up. You know what? They can see that on the weekly update you do at the end of the day, and we'll have that out on EWO Trader.
Yep.
But
Well,
Rob, you have a great weekend, especially today is National Junk Food Day. So being in a golf tournament, you can probably take down a couple of hot dogs and so forth.
I think trying to stay fit in this heat because it is so hot here. I live on the coast, so it's cooler with the breeze. It's really hot here in Orlando. So I think I'll pass on the junk food. Thank you for the information, though, and see if I can just drink some water and get through the weekend without hurting myself.
All right, Rob. Well, good luck at the tournament, and we'll see you 2 o'clock Eastern Standard Time again next week.
Sounds good, Doug. Thank you. Have a great weekend, everybody.